Hello, and good morning, guys. It's a lovely Wednesday morning, and today is the 12th day of August 2026. This is, let me do a recap of, sorry, I just deleted the yesterday's analysis, but I had a screenshot of the same. Uh, this is what we are looking for. This is what we are looking at yesterday. Here's what we were looking at yesterday, and we were looking for potential buys above this level. We never got a confirmation for the buys, and for the sales, we were looking for potential sales below this level. We got a confirmation once this candle closed below our level with some good bearish momentum. You can see the size of the candle. The size of the candle measures the momentum. The size of the candle, the body of the candle, the size of the body of the candle is what measures the pressure or the momentum. The bearish momentum was good. Gave me confidence in taking a sell here. So I was waiting for price to come retest and rejection, and then entry and take the market down. So once you got this, apologies. Once you got this break here, uh, I don't know if you can see this was two candles. These two candles formed 1 hour. Okay, so there was a fair value gap between this candle. So if these two candles form one candle, so the fair value gap was between this candle and this one here. This was the first candle, the second candle, and then this one was the third candle. This one and this one, this one and this one. Okay, so there was a fair value gap here. There was a 1 hour fair value gap here, and at 50% of the fair value gap is where price was getting rejected. Okay, so this is where my entry was. My entry was here. Stop loss just on this support here. So price came, got rejected here at 50%. I was activated, tried to push up, then closed. This candle closed all the way down here on 1 hour. I don't know if you can see it. Let me just go back to 1 hour. And this was the candle. Yeah, this is the 1 hour candle. I got rejected, closed the way down here, and this gave me much confidence in taking the trade. This was the 1 hour fair value gap that I'm trying to explain here. This is the 1 hour fair value gap. So at 50% of the fair value gap is where we have 50%. That's the fair value gap. The fair value gap. So at 50%, this is where price was getting rejected. My entry was here. Stop loss just above the candle that broke below our level here. This is where I had my stop loss. We got activated. Price kept pushing down and down until we came to this level here. We came to this level here, and we didn't hit our TP1 or TP2. Our TP1 and TP2 were here. This is our TP1, TP2, and TP3. It never hit any of them. So once price came here, once we got this break of structure here, I moved my stop loss to break even here. So today morning, I've woken up, my stop loss had been tapped, and I was out of the market. So that was a break even trade. We didn't make any profit, we didn't make any losses. You can see what happened. Price went up, tapped our stop loss here. Had we not moved our stop loss to break even, we would have been stopped out. We would have been liquidated. Our position would have been liquidated here. Okay, so that's why it's good. It's good to monitor your trade sometimes. Just monitor your trade. Risk management is key. Okay, always. Okay, so that was yesterday's trade. It was a break-even trade. So far this month, we have only executed two trades. That was NFP. NFP got out with a win. This was the second trade. The second trade was a break-even trade. So that was all for yesterday. Let's see what we have today. Get back to the charts, see what we have today. So this is how I use the Fibonacci on the fair value gap. I only have it calibrated 0, 50%, and 100%. So if you see any breach above 50%, if 50% of the fair value gap is breached, then that fair value gap will not hold. That's how I treat the fair value gap. Once if you get a fair value gap and a breakout and a fair value gap, then price may not test your original breakout level. Price might respect the fair value gap, and that is why I include the fair value gaps in my strategy. Okay. So now let's look at the fundamentals. Let's look at what you have on the fundamentals. I know CPI is coming in today. And if CPI comes in today hot, then let's see what time is it. Wednesday, yeah. So yeah, at 3:30 p.m. we have core CPI and the core CPI year over year and the core CPI month over month. Is some very volatile red folder news. It could really shake the market today. So watch out for at 3:30 p.m. If you're in the market, you either bring your stop loss to break even. That is option number one. Option number two, close your entire position. That's option number two. Option number three, stay out of the market. Okay, that's option number three. You have three options. The choice is yours. Okay, so now we have the fundamentals. 3:30 p.m. At 3:25 p.m. if you want to stay out of the market, close all your positions and just watch until about 15 minutes or so after the release of the news. So at around 3:45, you can get into the market. If you get a good entry, then take it. Okay. So that's how you trade the but myself, I'll be trading the CPI at 3:30 p.m. Okay. So let's get back to our charts. See what we have today. I'd already deleted everything. So here we identify our levels of support and resistance. Our resistance is up there. Our support is down here on the weekly. We have our support down there, our resistance up there. On the daily, we are looking at this resistance, this support here, and the resistance is yesterday's candle high. That's our resistance there, because we had this break here. And on 4 hours, we are looking at this structure that was broken here. We had this break of structure here. We had a break of structure there, and this is our resistance. This is our 4 hour resistance, and our 4 hour support is down here. When you get to 4 hours, I like to just move the support to sit on to where the bodies are seated, and that's where the bodies are seated, I believe. Yeah, 43.29. That's where the bodies are seated. That's where the bodies are seated, and then you identify this level, the lowest wick. It's a target. It's a liquidity target there. Same thing on the buy side. Move it to where the bodies are. Let it sit on the bodies, then identify the highest wick. That's our target there. So now we have narrowed down our 4 hour range. This is our 4 hour range. So down to 1 hour. And on 1 hour, on 1 hour we are looking at, we had this break here. We had this break of structure here. So on 1 hour, we are looking at the same thing, more or less. So if we were to look at 1 hour, then so we can we can work with the internal structure here. Yeah, we can work with the internal structure here. So our 1 hour resistance is here. We had this 1 hour break of structure here. Just a minute. So move this one to the body there. I'll move this one to the wicks there. That is our resistance. We have this internal break of structure here on 1 hour. That break of structure there to internal. Then we have this resistance down here. So on 1 hour, we have narrowed down our levels. This is our level on 1 hour. This is the resistance, and this is the support up here. Up here we have the support. That's the resistance and the support on 1 hour. So down to 30 minutes. Down to 30 minutes. Now on 30 minutes, we had this 8 a.m. candle. We had this break here. Now on 30 minutes, we are looking at the same level in 30 minutes because we had that break there. So our 30 minutes resistance is here. 30 minutes support. Our 30 minutes support is here. 30 minutes resistance is up here. So this is where I'll be looking for a trade on 30 minutes. And on 30 minutes for buys, I'll be looking for a buy above this level here. Potential buys above this level here. For the sales, I would be looking for potential sales below this level here. Potential sales from that level there, but here we had some good risky ATM. We had this support here. Right here. This one here would have been a very good high risk entry. For those with a high risk appetite, this would have been a good entry here. Would have entered the market from here. Short position from here. Stop loss just about there. And taking it down to this level here. You have 2.35, yeah. someone with some quick hands and high risk appetite, then this one would have been a good trade for you. That would have been a very good trade for you. That would have been a good entry for you, not a good trade, a good entry. For me, I'll be looking for buys above this level. If I get a close above that level there, I'll be looking for buys, looking to push them above that level there. For the sales, let's see first what do we have on 15 minutes. For the sales, I'll be looking for a short position down right here and taking the market down to that level there. So let me see, I like to see my targets on the 4 hours, see how it looks like. If I target the 4-hour lows and the 4-hour highs. The liquidity above the 4-hour low, above the 4-hour high, and the liquidity below the 4-hour low. So here I would be targeting the liquidity below this level here. And on this side, I'll be targeting the liquidity above this level here. This is the 4-hour low, this is the 4-hour high. So I'm targeting this liquidity. That's why I identify these levels as my target. So I'll be targeting this liquidity. If we should we break above, let's see on the left side what we have. Well, if we break above that level there, if we break above this level, then the next target, just a minute. Yeah, if we break above this level, the next target, I'm targeting this level here. I'm targeting that level there, and perhaps maybe this level here. So you see, I don't just make up these levels. I don't make up these targets. My take profits. I don't make them out of thin air. You have to observe what's on the left. Okay, always look left. Always look left. Always look left. So there we have it. Now the whole picture is coming together. So that's what I'll be targeting today. If we get a good break above, I'm targeting this level here. If we get a good break below, I'm targeting this level here. And perhaps you could include these levels here. If we get some good bearish momentum, well, this could be liquidities to look out for too. These are levels worth watching. If we get a good break below here, target this liquidity here. If the momentum is high, you could push to any of these liquidities here. On the buy side, target this level here. Good clean move in and out of the market real quick. So remember guys, always trade what you see, not what you think. Risk management should be your closest ally in this industry. Risk management is key. And remember, this is not financial advice to trade. Always do your own research, and it's worth noting that trading involves a lot of risk and you could lose your capital. So always do your own research first before executing and trade responsibly. I'm out. See you.